Welcome to the All Financial Hour podcast with Steve All.
The word annuity, it often gets a bad rap in the financial world. Critics tend to group all types of annuities under one umbrella, but if you're a listener to this show, you know better because you know that's not true. So, Steve, for somebody who's new, let's break this down. What is an annuity? And of course, like with everything, there's always pros and cons. Give it to me, Steve.
The word annuity, I know as soon as that mentioned, some people grow horns because Uncle Joe's told them a horror story about an annuity 10, 15, 20 years ago. Somebody gave all their money to an insurance company. They died and they got to keep it. That's usually the one with most people hear the word annuity. That's what they think of. So let's look at the different types of annuity because, as you said, there are more than one types. Single premium immediate annuity. You do hand your money to an insurance company, and they're going to pay you a guaranteed income for the rest of your life, and if you do it for you and your spouse, for the rest of both of your lives. To get rid of that Uncle Joe story that I told, there's usually period certains where you're going to get guaranteed that you're going to pay for 10 years. So if you die at 2 years later, they don't get to keep your money. They're going to pay it out to somebody else over time. The variable annuity. Variable annuity, your money's in the market. It goes up with the market. It goes down with the market. There's usually a little bit more expenses in the variable annuity because of the fact there's administrative fees and there's a management fee inside of the annuity. So the annuities can have a little bit higher cost. Fixed annuity. A fixed annuity looks a lot like a CD. It's with an insurance company, not with a bank. And they're going to pay you a certain rate for a certain period of time. So that's a fixed annuity. The fixed indexed annuity, your money's not in the market. It's sitting in a bond portfolio, and they use the dollars that they're not guaranteeing they're going to pay you anything to buy an option. Whatever the index they're using is up, it's yours. So for that, there's limits because you're basement, I can't lose money. So there are limits on the amount that you make. The idea that I have to look at for annuity is you got to give me the right tool for the right job. I don't need an income producing annuity if my Social Security and my pensions are above my cost of living. I don't really need that. I'm buying something I don't really need. But if there's a gap between those two things because you don't have that company pension that a lot of people have, and all of a sudden you do the numbers and your cost of living, I'm going to say, is $6,000 a month, and your Social Security adds up to $4,000. You got a $2,000 gap. Mm-hmm. Could I put it in an annuity and have a life insurance company guarantee that gap? Yes, it's possible. I call it a personally funded pension. You're putting your money into it. It's not guaranteed by the company that you work for. It's guaranteed by an insurance company. If you need an income guarantee, I think it's a wonderful thing. And then the other thing that we like to use it for is principal protection. The fixed index annuity cannot go down due to market volatility. So I can never have a return of less than zero. That's what we call asset protection. Only has the availability to go up. The worst thing you can get is a zero. So, depending on your situation, everybody's situation out there is different. If you need income, an income paying annuity would be very good for you. If you want principal protection, there's a great way to do that too with that fixed indexed annuity. So the idea around it of it is, what do you need and will it fit? I don't believe it's the end all be all for everybody. But I think if somebody's very conservative and looking for asset protection, but they want some growth, I think it's a wonderful tool. If somebody's got a gap between their lifestyle and their guaranteed incomes in retirement, an income annuity could fit in very well.
This is interesting. Actor Seth Rogen, he usually makes us laugh. He's the comedian in the movies, but he and his wife, Lauren, they are actually out with a very new documentary. It's called Taking Care, and it chronicles their journey in taking care of Lauren's mother who has Alzheimer's.
It's very expensive, and it's hundreds of thousands of dollars a year to really give someone good 24-hour-a-day in-home care. And to most people, hundreds of thousands of dollars a year is not an amount of money you just have laying around to spend on something that is not giving you anything other than like some slight sense of normalcy. You know what I mean?
I think we do know what you mean. And, if he's that, bombarded of the costs, and he's, worth hundreds of millions of dollars. Imagine us regular folks here, right? I mean, because nobody wants to leave this financial burden for a family. We want everyone to be comfortable and taken care of. And it's also a sensitive conversation, right, Steve?
It's one of the hardest conversations to have. It's also why I'm in the industry. I wasn't always on this side of the table. I had an advisor for a lot of years. But when my mom got Alzheimer's, there was no plan for that. My dad went to somebody and they sold him products. Well, the products that he had bought didn't fit this thing. So I had to look at it and say, God, you're helping business people run their businesses, but you're not helping people like your parents. So I switched. And I think this is an area that our industry has done a very poor job in. You have straight long-term care insurance. It's use it or lose it. It can be very, very, very expensive. Why? Because they quote Cadillac plans. If it's a $12,000 facility a month, we'll get you a policy to cover that. And people look at the price and say, I can't afford that. So you look down, maybe I didn't need the Cadillac. Maybe I could just use a VW. And then now they have annuities out there that have enhanced benefits that, God forbid, you have that long-term care exposure, that you have something to do it. And they have life insurance. And it's always easy for me to talk to somebody about covering themselves with either straight long-term care, an annuity with an enhanced benefit, or a life insurance contract that if they can't do it, the chronic illness rider kicks in. It's easy for people like me. I've got one of each. I had the original when they had it, and then they came out with the annuities, and I also like the life insurance because I look at it to the point I don't want to pass that burden on to my children. So if you're concerned about the cost of long-term care and you want to know what the other options are more about, just use it or lose it.
Steve, this is a question I know it's kept you up at night a few times. Where in the world does chocolate milk come from? Believe it or not, this is actually a survey people were dying to know the answer, apparently, by the Innovation Center of U.S. Dairy. And here is influencer Doug Sharp with the astounding results. Listen to this.
And what they found was 7% of Americans think chocolate milk comes from brown cows, which doesn't sound like much. But if we expand that number across the whole of the American population, it would mean around 23 million people think chocolate milk is brown cow milk. The survey also found that half the people who answered didn't know where chocolate milk came from.
All right, so I don't know whether to laugh or be terrified. But it's neither here nor there,
so are
right,
you
Steve?
telling me it doesn't come from brown cows?
Oh, I hate to be the one to break it to you live on the air here, but it doesn't, folks. Come on.
Oh,
Come
man.
on. But,
That's
just
fallacy my father told me years ago.
Yeah, you've been believing it for, 60 plus years. Here you are.
Yeah.
Well, it got me thinking about different myths in life, whether it's about this or what have you. And it got me thinking about, retirement myths that I know are out there that people don't even question. They just believe it. So this is where you come in, Steve. What are some of those popular myths?
I think let's go through them fairly quickly here at the end. I think the one that Social Security is going to cover my expenses. Social Security wasn't designed as a retirement plan. It's an old age survivor's disability insurance. So it will not cover all your expenses. It's amazing when I tell people that Medicare is not free. A lot of people think Medicare, as soon as they get 65, they got no more medical cost anymore. That's not true. The other one that we bought into and we were sold a long time ago is you're going to be at a lower tax bracket in retirement. Well, I don't believe that's going to be true when the debt keeps climbing and climbing and climbing. We're going to have to pay the pauper someday. So the idea around it is that I believe by reducing or eliminating taxes, it's the best thing that you can possibly do for a successful retirement plan. And we're doing presentations. Go to our website on taxes in retirement. And then we're going to have you come in, ask for that comprehensive retirement plan, allow myself and my team to run a tax analysis for you so that we can figure out, do you have too much money in your IRAs and 401ks, and will you be subject to that tax rate risk in the future?
Republicans and Democrats, they may not see eye to eye on much, or God knows pretty much anything. But there's a new study from Greenwald Research that says both parties agree there is a retirement crisis and that these are the four biggest issues. Number one, too much debt. Number two, inflation. Number 3, uncertainty about Social Security. And number 4, lack of a pension or guaranteed income. Steve, I'm just going to let you take this one away. What are your thoughts?
We have a very divided group. We have people that are well prepared for retirement, and with people that aren't even close to being prepared for retirement. And I'd say the one that you started with first is probably the biggest problem that we have. Too much debt. Credit is too easy to get. You know, when I have people that come in and sit down in my office, you know, and they got $75 to $80 to $100,000 worth of credit card debt, and they want to ask me about saving. And I'm going, I don't have anything out here that you can make 24% or more on. Not on a regular basis. We might have some good years in the market, but we're not going to make 24%. And if you're paying 24% interest on your credit card debt, that's what it would take. You know, get those things out of the way first. I mean, for myself, I don't believe in a lot of his investment philosophies, but Dave Ramsey's Financial Peace is probably the greatest thing that you can do if you're in a credit problem, if you've got too much debt. His debt snowball is fantastic. I've taken the class. I was asked to teach it, but I don't agree with a lot of the investment philosophies behind it. But I agree with the idea of what's a want and what's a need. You know, and I look at it when we start to, the young people, when they come in and sit down and talk to me, the kids of my clients, they ask, what should you do? And I said, if you can learn to live by the 80-10-10 rule, you're going to be okay. And they go, well, what's that? And I said, I want you to put 10 to 15% back for your retirement. Not a vacation fund, not an emergency fund, into something that you're not going to touch until your retirement years. Put another 10% towards wherever you get to your faith or a charity of your choice. Give something away, and in my opinion, you get more. Learn to live on 75 to 80% of your money. You're never going to get caught in that trap of spending 125% of your income, because that is the biggest problem that we have out here right now. And in my opinion, it is the ease of credit and the debt that people have. Inflation. It's funny, we could look back 5 years ago and inflation was so low that nobody cared about it. And that's where you get to those idea of headwinds and tailwinds. They're always different. What was a, quote, tailwind, low inflation, years ago is now a headwind. And, you know, people say, will it last? I said, yes, it will last, because I remember the 80s when inflation was way up there. And interest rates to borrow money as a business were at 21 and 22%. Credit card type rates. That's what the banks charged back then. So that didn't stay. It came down. I believe that, you know, our inflation will come down again. Social Security. I can still remember when I graduated from college that I didn't think Social Security would be here when I got old enough to take it. I actually am old enough to take it now. My wife is actually getting a Social Security check. So it's here. But what happened in the 80s when they didn't think it was going to be, they started putting some tax on Social Security. 50% of your Social Security incomes over a certain number could be taxed. Then in the 90s, when we thought it was going to go away, they raised that number. If you have income over another amount, that 85% of your Social Security would be taxed. So they kick it down the road as far as they can. Then they do something about it. Because like I said, I didn't think it was going to be here. It is. Do I think it's going to change? Absolutely. I've not heard this from any big person in Congress or anything like that, but I believe in the future that Social Security is going to be means tested. And if you have assets over a certain number and or income over a certain number, you're not going to get your Social Security check. And it's for everybody that's out there that's ready to call me right now and say, that's not fair. I agree with you 1,000%. But if they don't do something, Social Security is going to be reduced by 25% in 2033 or 2034. And I look at it to the point that I believe that the Elon Musks of the world, Jeff Bezos, multi 40 million, 50 million and up people, I believe could live without a Social Security check. I don't believe when the average check is about $1,900 That means that that's the middle point. High right now is about 5,000. So that means low. The lowest I've ever heard was somebody that had about $190 for their, quote, Social Security check. They were a school teacher, windfall elimination. So 190 versus the big ones. The average is about $1,900. If you were trying to live on $1,500 a month and they cut it by 25%, what do you think the chances would be that you could do that? People can't. And I believe that those with assets would rather theirs be lowered than to tell somebody that's got $1,000 check, you're only going to get $750. I just don't see that. I think we need to take care of those things. Then lack of pensions or guaranteed income. We used to have the three-legged stool for retirement. What was it? We had Social Security, we had pensions, and we had personal savings. But what happened? The 401k was introduced. You know, it was designed for wealthy business executives. Put money back so that when you're in a lower tax bracket, you can take it out then. It was brought around in the 70s. The highest tax bracket in the 70s was 60 to 70%. So chances are they were going to be. But then we decided, hey, you're letting the rich guys do that. What about us? So the companies looked at it and said, you want to save for your own retirement? All we have to do is put in a match instead of us guaranteeing you a pension? There's not as many industry today that have that guaranteed pension from the companies. It's not there anymore. Just a few things have that. Usually teachers, government, and the trades. So a lot of us don't have that guaranteed income coming in every single month. Then you throw Social Security, the second leg out of it, and say it might not stand up either. Now we got a one-legged stool. Save for our own retirement. And for a lot of people, when you have inflation in the 7, 8, 9% area, groceries going through the roof, they're just making ends meet. They don't have enough to put back for that savings. So yes, we do have a crisis today in retirement. The idea, it's hard to start late. The best time to start is now. If you're young and you haven't, start now.
Yeah.
If you're unsure where you're at in that process, give me a call. If you've been saving and would like that, what I call a personally funded pension, take some of your money, put it into an annuity with an income rider so that it'll pay you a guaranteed amount of income, and if it's for you and your spouse, to cover those lifestyle expenses. And if you've got enough assets to do that, that covers my lifestyle. The extras I can take out of my other savings. I have that guaranteed income that I can't outlive. I think those are the most important things. And I think when we look at this today, you know, overspending's the biggest problem. But a government does that on a daily basis. It's hard to tell the other people not to do it. But remember the 80-10-10 rule if you're younger, and get the debt under control. Credit's way too easy to get.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.